Hello, my name is Michael Glass from eMiniTradingCoach.com, where we focus on high probability trading setups. And today we want to talk about chart patterns, specifically double tops and double bottoms. But before we begin, we want to talk about our disclosures. Any symbols that you see today should not be inferred as a trading recommendation. All levels of investment, stock, forex, future options have a level of risk associated with them. You have to determine whether or not that risk matches who you are with a trader. You can lose your money. You can lose all your money. Any investments that you make is solely your own responsibility. Trade at your own risk. So as we begin to talk about chart patterns and double tops and double bottoms, we got to get sort of to the crux of who we are as a trader. We have to juggle. And in our quote here, we see juggling sometimes the art of controlling patterns and controlling those patterns in time and space. And we talk about a mini trading coach, the importance to identify the direction of the market and finding good locations. And that's all what high probability trading is about. Identifying the time of the day, identifying the space where we are in the market. Are you buying in space? Are you buying in value? And chart patterns help us control those patterns and control that space. Chart patterns help us gauge the momentum of the market. They help us identify support and resistance levels. They help us identify overbought and oversold and give us a sentiment of what the market is saying about the current price of our stock. When we think about how these chart patterns express the sentiment, we realize that double tops and double bottom chart patterns are just a retest. Price once again going to a certain price level which was once thought as value and now being thought as a bad place, and the sellers or the buyers, depending on where we're at, have come in to change the direction and to change the sentiment of that stock. And a double top, we see that the stock is in an uptrend and it makes a peak. And this is a clear signal that as we come back and retest that peak, top number 2, that the price is weakening because we're unable to make a new high. Therefore, the trend is considered to be reversed, and as we head down, we are now making a move lower, and again, the trend is reversed. Now, the opposite can be said here in double bottoms. Once again, we're looking for a downtrend. We make a new low. We test that new low, and since we're not able to make a new low, that strength of that downward move is weakening, and the price begins to reverse. And now we're looking to see the move of the stock to go higher. Now, one of the best things we can do to gauge whether or not we're going to make a new low, or if this is a double bottom or a double top, is to look at the volume and see what volume is telling us. Because we're making in a trend, volume is pushing us lower, volume is pushing us higher. And as we retrace, we know light volume occurs as we pull back. And as we go back to retest that low, to retest that high, we want to see volume come back, and that's going to push us lower. But if volume does not come back and it continues to be low, and instead, after we fail to make a new low, and volume comes in as we're breaking higher, that is confirmation that the price that we were once looking to break has now become support or resistance, and the value is in pushing the stock in the opposite direction as it reverses. So we're going to take a look here. We're starting off with Citigroup here, and we're looking at a daily chart, and I'm just kind of see if I can find some double bottoms. Just looking at this chart, I can see some double top in this area. I can also see a double bottom right in here. So let's first start off right here in this area and look at this double top here. So I'm just going to highlight it. And what I usually normally do is just come in and try to identify support and resistance. Where's that double? So yes, we do have this high right here, which it again wasn't able to test. But I'll just come in, draw a quick price level here, and we can see somewhere in here is our price level. That price is coming up. It comes up again. Now you have two options for this. So when we came down right here, price started down here at 250, came up, made a high, kind of tested it here again, And our neckline is probably right in this area here. So you have a couple options. One option simply is, as you break this trend line, when you break this neckline, that is your entry. And if you did that, you would take a little heat and then you would have done fine. Some people like to do the retracement, which is come in and as it retraces back, sort of like with the head and shoulders pattern. Some people trade the break, some people trade the break and then the pullback, and then they trade it. So depending on how you trade it, you might have taken a little heat, about 20 cents heat, or if you would have waited for the breakthrough, you would have done fine and made $1. Now, the more aggressive trade is once it fails to make the high, the new high, some people will trade immediately. That's a lot more aggressive. The conservative entry, again, is to wait for the break of the neckline. And you can see we had some volume as we were pushing up higher. We had some volume as we made this high. And then notice that when we peak here, our volume did pick up a little bit, but it didn't match the high. Look how higher these candles are. And then as we began to break, once again, volume picked up. So again, all we're doing is looking for our double tops and our neckline, and let's break. Let's zoom back out. And we also see right in this area here, let's go back to my pointer, and we can see a double bottom in here. Let's highlight that, see what's going on there. Okay, you can see, we'll go to our price level, see what price level we're testing right in this area. You guys can see that. So as price is coming down from our double top, testing this level, here's our neckline right in here at the 347 level. So price comes down, pulls back, comes down again, unable to make a new low. As we break this sort of like 345 level, that is your conservative entry. And you can see we never even got a pullback for our super conservative folks. And we took off for $1 from there. So again, our double tops came down, volume okay. As we tested, volume's lighter than it was over here. And then as we're breaking the neckline, volume confirms it because it increases. So basically, our trade signal is to look for a break of the neckline, put a stop above the last peak. And on a double top, you put it above the resistance at the top. On a double bottom, you put it at the support below. As price breaks that support line, that neckline, that is where we're going to look to enter the trade. And again, we place our stop behind the previous high or low to protect it from being taken out. Now, we also want to recommend stock reflex. The best way to juggle the patterns, to be able to recognize them, is to practice in advance. Pattern recognition makes trading these patterns second nature. How many times have you seen a pattern after the fact and then it's obvious? Well, the way that you can sharpen your skills and the way that you can start to recognize them as they happen is by practicing. And so Stock Reflex, eminitradingcoach.com/training.html is a good way to sharpen your pattern recognition skills. You guys know that we are on YouTube, Facebook, and Twitter. We've got a great instructional video series for you where we go over the building blocks of trading, technical analysis, chart patterns, trading plans. And then in our second part of that video, we go over how to identify trade direction, where are good places to locate, to find area in space, to find our entries, what is going to be our triggers, and then finally how we manage the trade. And then in our third part of that video curriculum, we go over all the setups, how to use Merkin turtles, and the routines to have some successful traders. But we firmly believe that, and we give a lot of this stuff for free. If you go to our site, Immediate Trading Coach, you'll find a lot of stuff, especially on our blog, for free. But if it was as simple as reading or watching a video, then everybody would be being rich. But there is a trigger that we as coaches can help you by working with you one-on-one, developing a personalized trading plan so that you can have the psychological capital to not only see it, but actually execute and act upon what you see. We also have a audio series on how to train your mind. And of course, we do have a free 8-video course. As we said, we've got plenty of free stuff for you. But usually the difference is not just seeing it, but being able to act on it. And that takes turning on the inner trader, building that psychological capital, because it doesn't make a difference about all this. If you have a new trading system, a new indicator, if you're in a trading room, if you are able to see the high probability trading steps that we teach you, if you're not able to pull the trigger. And so that's what we do at E-mini Trading Coach, give you the psychological capital that you need to be able to pull and act on what you see. Thanks, guys, and we'll see you next time.